Good morning and welcome to the latest edition of the Borges Monday Report for 2024. Central banks were back in the spotlight last week. After the ECB and the SNB in the previous week, it was the turn of the US Fed, the Bank of England and the Bank of Japan to announce their monetary policy decisions. As expected, the Bank of England paused in its monetary easing cycle and left interest rates unchanged. The BOJ did the same, but in an upward cycle at odds with the other central banks. The Fed cut rates by 25 basis points as expected, but Mr. Powell's tone at the press conference was more hawkish than expected. However, the release of the PCE price index in the day after these statements was reassuring. The index was only 0.1% in November, less than expected. This good news on inflation limited but did not prevent 10-year sovereign yields to increase. They rose by 13 basis points in the US and by 5-6 basis points in the Eurozone, pushing bond prices down by 0.9% in the US and by 0.3% in Europe. The level reached by interest rates is causing some concern for equities, which are down by 2% in the US, by 2.8% in Europe, and by more than 3% in emerging markets. The change in interest rates has pushed the US dollar up by 1.3%. Unsurprisingly, gold suffered from the simultaneous rise in interest rates and the dollar falling by 1.3%. This week will be light in terms of economic data publication. US consumer confidence will be the most important. We are ready to buy the shares of the Swiss elevator operator Schindler. The company has less and less exposure to China, whose real estate market is in crisis, and we believe that profit margins will increase, will take the lift as a result of the restructuring that has been carried out. This should allow the stock to outperform its sector. That's all for today, but before I go, I would like to wish you a Merry Christmas and a very happy 2025. Best wishes and see you next year.